Yes, ma'am. ए भाई. Requesting everybody to kindly be seated. The guests are about to arrive. And please keep your phones on silent. Thank you. Dusija from DES JS Kothari Business School. And I'm Crystal Suarez from DES NMITD. And we are your hosts for Share Bazaar 2023. Knowledge isn't power until it is applied, as quoted by Dale Carnegie. Good morning, intelligent investors. Financial literacy is a core life skill for our youths. We, as millennials, are growing up in an increasingly complex world, and the sooner we take the charge of our financial destiny, the better. In order to empower us, the flagship event celebrating its 12th year, DES NAVINCHANDRA MEHTA Institute of Technology and Development and JS Kothari Business School presents Bombay Stock Exchange Investors Protection Fund sponsored, Sharekhan Limited co-sponsored Share Bazaar Event 2023. This is a 3-day live trading event. On the first day, the students would be getting expert guidance regarding basics of stock trading, fundamental and technical analysis. On day 2, the participants would be trading on 10 selected scripts by investing ₹1,000 per team. They would be getting an exposure of ₹4,000 per team. Based on the trades taken by various teams, many attractive prizes would be given, including the following: first cash prize ₹15,000, second cash prize ₹10,000, and the third cash prize ₹5,000. Apart from the above, there are various cash prizes for the best portfolio, accurate stock prediction, first profitable trade, and the best loser. On the third day,
Price distribution would be done by the senior management of Bombay Stock Exchange, Investor Protection Fund and Share Khan. Now, we'll have a glimpse of the journey of Share Bazaar from the past decade. Today, we are blessed by the august presence of a galaxy of stock market veterans amongst us. We have with us the following dignitaries: Mr. Dipen Mehta, sir, Founder Director, Alexia Securities Private Limited, who would give us an inaugural speech. With him, we have Mr. Mahesh Dalal, sir, CA by qualification, fourth generation, veteran stockbroker and Director, Major Trends Capital Private Limited. Mr. Arjun Marfatia, sir, Senior Vice President at Enam AMC. Sir has also successfully established Tata Capital Markets and is the founder CEO of Quantum Asset Management Company. We have Sapan Choksi, sir. He's an MBA in finance from NYU Stern School of Business, USA. Sir is also the CEO at Systems Plus Solution. We are also blessed by the presence of our patron DES, Mr. Sunilji NAVINCHANDRA Mehta, sir, Vice President at Alok Industries, and DES patron, Mr. Raj Khandwala, sir, an MBA from USA and is an investment advisor.
We begin this program with an invocation to Goddess Saraswati, the goddess of learning, who will bless all the participants with financial wisdom. As we begin this program with the lighting of the auspicious lamp and inaugurating the live trading event, I now request Principal, Kirti College, Dr. D.V. Pawar, sir, Life Member, Deccan Education Society, and Vice Principal, Kirti College, Dr. Minal Mapuskar, ma'am, In Charge Director, NMITD, Dr. Anita Bobde, ma'am, and Associate Director, NMITD, Dr. Rasika Malya, ma'am, to accompany the following guest of honor, Shri Dipen Mehta, sir, along with patron DES Shri Sunilji Navinchandra Mehta, sir, and DES patron Mr. Raj Khandwala, sir, to light the lamp. Thank you. I now request all the dignitary to kindly grace the dais.
शुक्लां ब्रह्मविचारसारपरमा आद्यां जगद्व्यापिनीं वीणापुस्तकधारिणीम् अभयदां जाड्यान्धकारापहां हस्ते स्फाटिकमालिकां विदधतीं पद्मास
Thank you. Now we request Principal Dr. D.V. Pawar sir to kindly welcome Mr. Dipen Mehta sir. Thank you, sir.
Now, I request Dr. Meenal Mapuskar ma'am to welcome Mr. Sunil Ji Mehta sir. Thank you, ma'am. May I now request Dr. Anita ma'am, Dr. Rasika ma'am to welcome Mr. Raj Khandwala sir. Thank you, ma'am. May I now request Dr. Anita ma'am to welcome our participants. Over to you, ma'am.
Stock markets are like the plane. The main thing is they will take you where you wish to go very fast, but at the same time, the crashes are also very spectacular. I would like to just start this by saying that this particular event that we are hosting for the last 12 years is basically as a financial literacy and awareness session for all the young millennials. Namaste and good morning to all the dignitaries on the dais and off it, and dear participants of Share Bazaar 2023. A very warm welcome from Team Share Bazaar. The concept of Share Bazaar was first envisioned in the year 2011 when it was called Jagruti, and we wanted all our students to get some experiential learning with regard to financial services. As I believe that we cannot learn driving or swimming with a theory class. What we need is we need to take a dip, or we have to drive a car or a bicycle. So therefore, what we thought is on day one, we have curated this session in such a way that on day one we will have experts from various fields who will give you the basics of stock market. We are also giving you a kit wherein there are 10 scripts which are listed, and I am very happy to state here, sir, that within a record time of less than 8 days, because the exams of a student got over on 3rd, and before 13th, more than 172 accounts, DMAT and trading accounts are opened. So I think a big round of applause for that. As someone who has worked in the broking services for a decade and a trader for over 3 decades, we decided that we will have this as an intercollegiate event, and so far the success of Share Bazaar as a flagship event of DES NMITD is such that there are today more than 2,000 you can say young investors that we were able to nurture, and today there are more than 500 such people who are already in a middle management position in various financial services. Right from the inception, we are very happy to have Bombay Stock Exchange Investor Protection Fund as our lead sponsor. And then there are various broking services who have always been part of the journey. The participants of Share Bazaar, as I already mentioned to you, will be doing the trading account on their own trading account. And on day 3, we will be having the prize distribution ceremony where the senior managers from Bombay Stock Exchange Investor Protection Fund as well as Sher Khan, who is the co-sponsor for this event, would be present. I would just like to say something about our 12 years. Purana refers that, they call it a tap. 12 years is like a tap. And Puranic references say that it takes almost 12 years to acquire good quality. And tapa means that we practice it something for 12 long years and then it becomes a part of your nature. Today, Share Bazaar is completing 12 years and I believe that all the participants of all the last 12 years have now smart trading in their DNA. I'm sure with the enthusiastic and committed team of our students, Share Bazaar would celebrate its silver and golden jubilee. And I'm very happy to welcome you all today and wish you happy trading. Thank you.
Thank you, Dr. Anita ma'am. We all are eager to hear from the veteran in the stock market, whom we hear and see on CNBC's Bazaar Morning Call, Mr. Dipen Mehta sir, Founder Director, Elixir Securities Private Limited. Mr. Mehta sir, by education is a BCom from Sydenham College of Commerce and is a CA. He has a total experience of over 29 years. Presently, he is the Founder Director, Elixir Equities Private Limited. Mr. Mehta sir has always believed in value investing, and Elixir has launched India's first smart investing platform, which is an automated portfolio management application which monitors underperforming stocks and replaces them with high-quality outperforming shares. He is a thought leader and a regular invitee on most TV channels like CNBC, ET, Bloomberg, and Star News. He is also a passionate educator of financial wellness. I now request Mr. Mehta sir to share his thoughts with the millennials.
Wow. Thank you very much for that wonderful introduction. And really, it's my privilege to be present over here. And I would say that your college is one of the gems which nobody knows about, at least, but now I've come to know about your college much more in the last few minutes or so. So thank you very much, and thank you for inviting me to inaugurate this epic event of yours. So I want to start and keep this session as interactive as possible so we can get the maximum out of it. So apart from the 170 trading accounts, demat accounts which got open, prior to that, how many of you all had trading accounts and demat accounts? I'd like a show of hands. Oh, wow. That's a lot. That's a lot. And amongst you who have a trading account or you don't have a trading account, how many of you all track the stock market through CNBC or ET Now or any social media channel? Okay, that number is a slightly fewer. So we have more people over here having trading and demat accounts and fewer who are actually tracking the stock market through CNBC or any of the other media channels. No problem. I will try and address that particular aspect as well. So just to give you a bit of a background about the stock market, it has been around for centuries. And the first stock exchange was launched somewhere in the 1600s. And it's been a really long journey for the stock markets. And over the years, I think the stock market is the centerpiece of a capitalistic economy. And no country can flourish or prosper without having a vibrant stock market. You may all have heard that it is a reflection of the economy, it's an indicator of the economy. And rising stock market means there's growing prosperity, that industry is doing well, companies are doing well, and that really is very true. But today I'm going to try and break down the stock market as simply as possible, the way I have understood it, in just a matter of few minutes or so. So many of you keep on reading in the newspapers and TV channels, stock price has gone up, stock price has gone down, there's a crash, there is a bull market, there's a bear market. And if you just follow the stock markets, there is always a lot of noise around it. Cement prices going up, this company, this bank is doing this. There's so much of news flow because there are more than 2,000 listed companies, and there are so many channels and newspapers, so they keep covering these companies, and there's a lot of noise. But if you want to make money in the stock market, which is why I think all of you are over here, there is just one thing that you need to keep an eye out for. Bolte na ki keep the eye on the ball. How Sachin Tendulkar hits a six is because he has an eye on the ball. So if you want to be the Sachin Tendulkar of investing, you need to have an eye on the ball, and that one thing is companies' profits. So many of you are me wondering why stock prices go up, why stock prices go down, and there are many reasons for it. But if you break it down, it all depends upon the profits of the company. So let's just compare the stock market or a stock price to a particular bond or a debenture. So if the bond is worth 100 rupees, the debenture is worth 100 rupees, and its interest is yielding 8%. So the value of the bond is 100 rupees and its interest income is 8 rupees. Now compare that to a stock price. So if a company is earning 8 rupees or 8 rupees profit, then if you compare it to a bond, then the value of that company should be 100 rupees, right? So far so good. Now what happens is that what happens if this 8 rupees in 2-3 years time becomes 16 rupees? Then shouldn't the value of the company go up from 100 rupees to 200 rupees, right? And if it goes up from, again doubles from 16 to 32, then the value of that particular company would go from 100 to 400. And that's exactly what happens in the stock market. You can forget about everything else. Stock prices go up, they go down, there are many variables, there are many things which come into play. But end of the day, if you want to make money in the stock market, if you want to buy the right quality stock, it only happens when the stock price goes, when the value of the company goes up, and the value of the company goes up when its profits go up. So if there is one thing that you need to look out for when you're investing in the stock market, it's the profitability of the company. Beyond that, there's a lot of noise, there are many variables, there are many ways to assess how the profits will go up, go down. But end of the day, money is made in the stock market only when the profits of the company start to move up. And there are many examples. If you look around you and you take a long-term trend or long-term assessment of all these stocks which have done well in the market, you will realize that those stocks have done well. They have created value only when the profits of the company have gone up. For example, the companies I can talk about, one of the best and highest value creator has been Bajaj Finance, right? You'll have all heard about Bajaj Finance, and I just want to share a few data points with you over here. So Bajaj Finance's stock price has gone up by a phenomenal 48 times in the last 10 years. 48 times. Can you imagine? I mean, if you had invested 1 lakh rupees, it would be worth 48 lakh rupees. So if you had just one such stock in your portfolio, you could have retired in 10 years' time. But the interesting thing about Bajaj Finance is that back 10 years ago, that is in fiscal year FY13, March 13, it had profits of 400 crores. Not small amount. It was a big company even then, 10 years ago. And its profits were 400 crores. And over a 10-year period, its profits went from 400 crores to now this year it should declare 11,000 crores worth of profits. So when you say the stock price has gone up 48 times, a lot of it's to do with the fact that the profits of the company have gone up 18 times in the intervening period. Now, all of you know about price to earning multiple. You may, or you can check on Google as well. I'm not getting into that particular quantitative stroke qualitative aspect of valuation. But less to suffice that if you want to find the next Bajaj Finance, then the best way to look at it is how much is the profit likely to go up in the next 5 years, 10 years, 15 years. And mind you, I think I don't have the figures before 10 years, but it would have been 40 crores for Bajaj Finance. Similarly, another company which has done exceptionally well is Tata Elxsi, Tata Group company. And you'll be astonished to know that 10 years ago, they were making a profit only of 21 crores for FY13. And this year, they should make profits of 725 crores. That's an increase of 34 times in a 10-year period. And that has resulted in the stock price going up by 62 times in a 10-year period. And 10 years is not long. I mean, you know, it's you can have memory of what you were, where you were 10 years ago or so. So this is exactly how the stock market works. If you want to make money in the stock market, you have to identify a stock like Bajaj Finance or Tata Elxsi or Titan Industries or Reliance Industries. There are so many of them where the stock price goes up because the profits of the company consistently keep on increasing year after year, year after year, year after year. And you may wonder that why this phenomena happens. Why do companies' profits like a Bajaj Finance or a Tata Elxsi, how can it grow by 30 times, 40 times over a 10-year period? And the reason for that is this country. See, India, as we all know, is really at the forefront of growth for the global economy. You all have been reading about India shining and the way, you know, last 10 years, 15 years, how much growth we have achieved. But that's the real reason why companies in India are able to grow at such a pace. Now imagine if you want to grow your profits at, 25% continuously if you grow, then over a 10-year period, your profits have gone up by 10 times. But it's not just the companies, it's also the environment which makes these companies generate those kind of profits. And from time to time, such phenomena take place, such events take place, such trends take place, which takes these companies to the next level. For example, Bajaj Finance, why did it do well? It's because for the first time they started offering consumer finance. Now, if some of you want to buy a telephone or a cell phone, you can easily buy a cell phone on an EMI, and the leading company which offers that finance is Bajaj Finance. Similarly, with Tata Elxsi, you've all been reading about electric vehicles over here, how it has grown, how it's going to be the next sort of disruptive force in the automobile industry. But not many of you will know that Tata Elxsi is in the forefront of developing the software which goes into the electric vehicles. They have a huge clientele with Jaguar, Land Rover and some of the larger EV companies. So they are developing the software and they have no dearth of business. If you talk to them, they do not take any more orders because there are so many automobile companies wanting to develop EVs and they need software partners to help them develop the software. Like that, there are many such success stories in India. Like HDFC Bank, for example. Now, so many of us have so many bank accounts with HDFC Bank. Prior to that, we were dealing with public sector banks and people not happy with their service. And then we had HDFC Bank coming in, offering credit cards and offering all their products. And then they had a technology platform. And what happened was that all the migration happened from the public sector banks to likes of HDFC, ICICI, Axis Bank, so on and so forth. And these companies, they kept on growing at 25% or so. And that's how they created value. So when you're looking at tracking the stock market and looking at investing in it for the long term, which you should, because the stock market can really be a second earner for you. It can be an earning family member if you get the formula right. And to get the formula right, avoid the noise and focus just on the profitability of the company. If you can track that, then continuously I think you'll be able to get right good quality stocks in it. And you'll be able to make a lot of wealth in the stock market and it'll give you a great deal of peace of mind as well. Now, let us come back to some of the other aspects of the stock market and why it is such a beautiful opportunity, of such a beautiful platform to make money. Now, India is such a diverse country. It is so vast and there are so many industries and there are so many sectors that you are spoiled for choice in India. And that's a fantastic thing because all sectors, even the economy will go through ups and downs. We all heard about the various economic cycles. There is boom, there is bust, there is recession, there is a complete bull market. But there are always some sectors, some industries which will always do very well. And let me give an example. So when Indian economies were in the dumps and the rupee was going down, then we had the external sector, the software companies do very well. And at the time of the pandemic, we had certain online trading platforms doing very well. Sometimes steel does very well, the metals do well, sometimes the automobiles will do well. And then there are a whole host of new generation industries and new listings which keep on happening. So there is so much of choice available in the market that you cannot say that today I can't find a stock which I think has the potential to keep on growing its profits. There'll always be something somewhere in this country which is doing exceedingly well, and it will provide an opportunity for you to make money in the market. Never think of the stock price as something which is in the air, or that entry in your demat account as just an entry. We all know that what we are doing here is we are buying a piece of the business, and as the profits of the company, as I said, go up, that's how the value of your holding in that particular company also will keep on moving up higher and higher. Coming to what may be of a lot of interest to you is the careers that you can look at in the stock market, and I'd like to give an overview on that as well, having told you about how you can actually make stock markets work for you. But it's a fantastic career opportunity as well for students, and I know that you'll offer many courses, and certainly we can look at recruiting from your college as well. But there are so many things opening up for young students like you who have the thirst to learn and to build their career. And don't just think of it from point of view of trading. Right now, there are so many facets in the financial services industry, and actually the industry is actually exploding because of the spread of fintechs. So if you divide the stock market, you've got the mutual funds, you've got the stock broking companies, you've got the new generation fintech companies, all of which are growing at a phenomenal pace. Within these companies, there are many roles available, like there are the roles which are there for relationship managers, because there's a huge wealth management business also which is picking up in India because of the wealth effect. So that's one area of opportunity for you. Then if you have the liking to read and study and go deep into the companies, then there's the entire equity research, even bond market research. That entire vertical is available to students to explore, and that's a continuous learning process over there. And as you get more and more experience, that's how you start to identify the right stocks and the right bonds to look at investing in. You have the entire back office processing, and don't think that that's like a complete desk job. There are so many variables over there, so many compliances, and things are changing all the time. And managing a good back office is absolutely essential for keeping the solvency of the organization. People don't realize it, but it's the backroom boys who make sure that the company doesn't go bankrupt. They do the risk management, they do the finance management, and they do the cash flow management. So that's also a very critical role. And now we have a whole host of trading opportunities opening up. And many of you may not be aware, but in the NSE and BSE now they have their own data centers, and stockbrokers are putting their servers over there and doing high frequency trading. And that also is exploding. India has the largest derivatives market in the world. And over there, all you require is software skills. It's not so much about knowing the stock market and knowing fundamental analysis or technical analysis. It's all about the software, identifying the right server, identifying the right algorithm, making sure it is running efficiently. And that's how, there are so many traders who are just designing the software and then deploying it and making money for their companies or for themselves. So like that, there are many opportunities, and it's a growing line. And I would look, if you have the inclination and the liking for the stock market, the debt market, and mind you, the debt market is just about opening up. It's a great opportunity for you to look at investing your time and then building a career in the equity market as well. Now, let me come to something which is more topical. What is happening in the stock market just now, I think many of you have been following. And I'll just try and wrap up by giving you a bit of my understanding of what's happening in the stock market and the way forward or so. So right now, the stock markets have been going nowhere. In fact, they've been, on a declining trend. On most days, you find that FIs have come and sold the stock, and actually stock prices have gone nowhere. And the reason for that is that stock prices, the stock market, and interest rates have a very close correlation. So I described, first in the beginning of my presentation, how the bond, which is earning you 8 rupees interest, is worth 100 rupees. That's how the linkage is there. So the face value of the bond is 12.5 times the interest which you are earning. And suddenly, I think if the interest rates start to go up and the bond starts to trade lower, and that 100 rupees becomes 80 rupees, then it's trading at 10 times. And that's exactly what is happening, is because interest rates are going up, we are seeing that the value of the businesses are coming down, because the interest rate is very closely linked to the price to earnings multiple. And some of you who are finance students may understand price to earnings multiple. It's very closely linked to the premium or the value ascribed to the business. The multiple you ascribe to the profits of the company are very closely linked to the interest rates. And globally, after the pandemic, there have been many reasons: Ukraine war, supply chain disruptions, rise in commodity prices, rise in oil prices, weather patterns, all of which have affected inflation in the whole world. Every country is grappling with inflation management, and one of the ways to manage inflation is to keep on increasing interest rates so that demand cools down. And once demand cools down, then inflation comes into control. Central banks across the world, including India, US, Japan, everywhere, they hate rising inflation because that eats into the actual income of the household. So right now we are seeing interest rates continuously increasing, staying at higher levels, and there is no visibility when the interest rates will start to flatten out and then eventually start to go down, because such inflation and such interest rates we haven't seen in decades or so. So right now, because of higher inflation and higher interest rates, the multiple which you are paying for the business, that has to be reduced and adjusted. And that's the reason why, although underlying we are seeing a lot of profits and companies do well, and if you see the newspapers, many companies are reporting higher and higher profits year after year, quarter after quarter, but the stock price is going nowhere because this multiple is being compressed because of higher interest rates. And one doesn't really know when this phenomena will actually come to an end. But I can tell you one thing, that such kind of inflation and interest rates are in a way unsustainable. And fortunately for India, we have been dealing with high interest rates and high inflation for many decades. I think we've had, it's only last few years or last 10 years that we've had lower interest rates because of lower inflation. So as a country, as an economy, we're able to deal with inflation and interest rates far better than, say, a US or a Europe or a Japan. But nonetheless, unless we don't have interest rates and inflation come down, till that point of time, there's going to be stress in the stock market. So even if you're looking at making short-term profit in the stock market, I think you're going to be a bit disappointed, because this whole conundrum of inflation, interest rates is not going to get over pretty much soon. And you all must have heard about this Silicon Valley Bank recently that went under. It has more to do because of interest rates went up suddenly rather than poor lending standards. So these are the things which, accidents which keep on happening in such a situation. And because of that, the markets may remain, I would say, subdued for a long period of time. But India is a fabulously growing country. And once inflation, interest rates settles down, then you will see that growth again picking up in India. And you have so many growth companies, and India is a consumption economy. So if you look at just the the stocks which are engaged in producing mass items of consumption, then you will find that they will do exceedingly well over the next 5 to 10 years or so. When I'm trying to do research into the stocks which I want to buy for the next 10 years, then I'm looking at consumer-oriented companies, retail companies, entertainment companies, hospitality companies. So that's where I think that one should focus on in trying to find the next Bajaj Finance or the next Tata Elxsi for that matter. So with that, I'd like to throw this floor open for questions. And as I said, let's try and make it as interactive. You can ask me anything under the sun, including any stocks you may have invested in. This is a closed door meeting, so we'll have to be careful about the regulatory aspects. But certainly I'm there to answer any of your questions which we want to ask.
Sir, you have a view regarding Adani stocks?
Yeah, I was expecting that question. Don't worry. I get asked this question a lot on the media as well. And my assessment is that it's a fantastic group, no doubt about it. Very dynamic management. They have bought or created huge amount of assets. All these assets are performing. They are giving strong cash flows. So from a solvency point of view, from repayment of their loans point of view, I think there is no concern. The real problem in the Adani group is that the valuation, the multiple which you are giving to a business, that is extremely high. And when you compare it to the peer group, and that's where the problem starts to happen. So a lot of us investors, professional investors, investors who study businesses, they compare one business to another business. They feel that, and they're of the opinion that the stocks are extremely expensive, which is why we have seen that one-time correction which is taking place, and you may see even more correction happening in Adani Group stocks as well. The reason why the stock prices went up so much is because the entire shareholding pattern is very concentrated. The promoters own 75% and 3FIs own another 12-13% or so. And locally in the market also, many traders have taken huge bets on Adani, so that's why the stock price went up. But end of the day, the valuation is very high for the Adani Group companies. And the only way, there are two ways to correct valuation. One is the actual stock prices come down. Other is that the profits start to go up. So at some point of time, there will be some correlation between what multiple the Adani Group stocks are trading at and what multiple their peer group stocks are trading at. Till that point of time, from a fundamental perspective, you need to look at Adani on a slightly cautious basis. I know it's very, very tempting. In my office, we've got a whole team of traders, and although I may tell them not to trade, but they keep on trading in Adani only because stock price goes up 5%, goes down 10%. There's a high degree of volatility. And if you have a trading mindset, then that's great for you. But from an investment perspective, it will not meet your checklist. It will not meet your basic requirement that the stock has to be at a reasonable valuation, that you should be assured of its growth 5, 10, 15 years from now as well. So from an investment perspective, it's avoidable. From a trading perspective, if you know how to trade, and mind you, many people think they know how to trade. And I have had in my office more than 400-500 traders come and go. And my assessment is that for every 30-40 traders who call themselves traders, there is one star trader. And that too I have seen in 10-15 years they burn out. So when you're looking at trading in the market on a daily basis or weekly basis or whichever way, you need to be extremely careful. And the reason why traders don't do well is because they don't know when to cut the losses. So, that's something easier said than done. And after being 40 years in the market, I have not been able to manage how to cut my losses.
Sir, it's a pleasure to see you live here like this. I've always seen you on screen.
Thank
you. My question is, if we talk about a diversified portfolio, now because we're talking about investments and long-term returns, what is your take on crypto stocks?
Oh, again, another financial innovation from US. And, I don't really understand how to value cryptocurrencies, or actually not currencies, they are another asset class. And there's a lot of confusion around it. But my sense is that you need to completely avoid crypto. Okay. See, actually, the stock market there is a lot of correlation in stock market and a casino. Both are tempting. You see prices go up, go down, and you think you can time it, but it is easier said than done. And this crypto is a new asset class which has come in, and all over the world 24/7 there is some trading activity happening in it. It is so easy to open an account, and with even 100 rupees you can buy a Bitcoin or any of these cryptocurrencies and then sell it next day, third day, fourth day. So there's a great deal of temptation. But as young students, you must avoid this temptation of doing in crypto, because whatever money, hard-earned money you invest in it, end of the day it is going to make losses for you. It may make profit for some point of time, but then it will take away all those profits in one go itself. So avoidable.
Thank you.
Sir, how SVB crisis will impact Indian stock market?
Well, thankfully the markets are up today. I checked before coming in, so I'm a bit relieved over there. But we live in very interesting times, and look at what has happened in the last 10-15 years or so. We had in 2000 we had the dot-com crash. Some of you may not have been there at that time, or may have been very small kids. But we had the dot-com crash, and that also happened because the valuations were crazy. So that was one of the reasons that people paid too much for those businesses. And then we had the great financial crisis of 2008, where Lehman Brothers collapsed. Then we had this pandemic, and then we've had such high inflation and interest rates. So there is just too much happening in this world where we can get our hands around or can understand them. So even this SVB crisis, it's something very new. I mean, banks have gone bankrupt. Large corporations have gone bankrupt in the past, but they have gone bankrupt because they have lent to the wrong people. Like Lehman Brothers, they had the exposure to mortgage-backed securities, and there were defaults over there. But in the case of SVB, they all had either government securities or mortgage, completely safe investments. Investments they had made, yet it went belly up because the value of those assets went down because interest rates went up. So it's difficult to assess what the fallout will be. I think that in the next week to fortnight, if there are no more such bank failures, because typically, these things, they have got they're interconnected, and there could be ripple effect, and some other banks also may get impacted. But if that damage is contained in the US and there are no more bank failures, or there are no more companies coming out and saying that they are stressed because of their balance sheets are stressed because of this SVB, then I think that particular negative event has been discounted and it won't have much of an effect. But if more and more such banks come out and say that, look, we also have a problem, we are looking at mark-to-market losses, we need to raise capital, then it could be the beginning of a new financial crisis. And your guess is as good as mine over there.
Hello, sir. Views on green energy stock for the upcoming 10 years.
Yeah, see, it's on the face of it, green energy looks very compelling as an argument, because we all know that we have to go for more and more energy sources which are renewable. But when you actually get granular and look at stocks to invest in the market, there are very few. Some of the traditional power companies have got large renewable portfolio, but that's a small portion of their business. And over there also there's a great deal of uncertainty around what rate of unit they will get from the government. And there are so many government rules, regulations, where the price of the unit, the power unit, keeps going up, keeps going down. So when you look at the companies actually engaged in green energy, you find that they don't have that nice secular growth in earnings. Then you look at the companies which supply equipment to the green energy, and that's where I am most fearful. And I have burnt my fingers with two companies which provide wind turbines. One is Suzlon and second one is Inox Wind. I mean, who could believe that in a sector where wind energy was absolutely the need of the hour, that the companies which actually make the wind energy equipment have destroyed value over the last 5-10 years or so. So I'm not that positive on green energy. It's an untried, untested technology, and typically, utilities will keep on increasing their green energy portfolio, but I don't see it as an opportunity to make a good investment. You have time, huh?
Good morning, sir. So, as like, what are the recent returns from the current stock market? And as youngsters, we should invest in index like Nifty or individual companies?
Oh, that's a fabulous question, and maybe I should have covered it in my speech and presentation as to how you should start to invest in the market as well. Now, I think that if you have the time and the gumption and the inclination to actually look at companies and do your own research and develop that as a passion or a hobby, then certainly you could look at investing in individual stocks and any of the index stocks, whether it is NSE's 50 or BSE's 30, and there are other indices where there is BSE 200, NSE 200. You could look at those stocks as your universe and then start to study them gradually. And as I said, look for companies where you see growth in earnings, and you could look at investing them and holding them for a long period of time and create a balanced portfolio. But if you do not have the time, then we have a flourishing mutual fund industry over here, and you could look at investing in the equity market with amounts as low as 500 rupees. And nowadays, as you see, the SIPs are extremely popular, and I'm amazed that even when the market trends are down, the SIP inflows are continuously being maintained or increased. In fact, February had the 9th highest month of in the last 9 months. The highest inflows in the mutual funds have come in the month of February. So that shows a great deal of maturity on the part of the investors. So depending upon your time, your interest, you could either do the invest in the stocks directly yourself by looking at the top 50 or the top 200 companies. If you don't have the time, then go for the mutual funds. I think it's a good way to start your investing journey.
Good morning, sir. Sir, what are the important aspects one need to study before investing in an IPO?
Okay. Now, IPO also is another fabulous opportunity for investors like you. And over the years, SEBI has made it very, very attractive for retail investors to apply an IPO. And I know for a fact that many family members, they apply in 3-4 accounts so that if they get even one allotment, then that company, that particular on listing, they are able to make a very good return. And if you do it on a consistent basis, I think investing in IPOs can give very good returns to you as well. Now, coming specifically to what are the parameters that you should look at for when applying for an IPO, I think by and large, as I said, I look for companies where there is growth. So if you look at the IPO which is coming in, and if you feel that particular industry or that particular stock has got a good runway for growth, then I'd be positively inclined. But if you feel that it's a run-of-the-mill type of a business where there's too much of competition, it's a mature type of an industry, then those are the IPOs which you need to avoid. But these days, all the companies which are coming to the public, they're all coming from high growth, new generation businesses. I'm not talking about the likes of the new fintech companies or like Nykaa or Paytm, which have, of course, declined, which have corrected significantly, but they're all new type of businesses, something innovative, something different which is there in them. And I think over the next 5 to 10 years, these are the companies which we really need to watch. So as a thumb rule, from an investment perspective also, we look at the IPOs after listing, 1 year after the listing, to see exactly whether they are great businesses or not. But yes, as an investor, you could look at investing in the IPO. The amount involved are pretty much small, and you do multiple applications, there's a good chance that you may get an allotment. But if it's a good company, then remain invested. Don't try and flip it over. In fact, one of the good ways to start a portfolio of stocks, individual stocks, is through the IPO route. You get those small holdings, you don't sell it on listing, you remain invested, you go for more IPOs, then you see that suddenly in 2-3 years, you have a nice basket of high performing, new generation growth companies in your portfolio. So that's a good way of looking at investing.
Good morning, sir.
Morning.
I'm a very small investor in that sense. I have taken the safer SIP route.
Fabulous. And what has been your experience?
Stay in it for a long run is what I figured out, because short term it's very volatile.
That's right.
Sir, you made a very interesting point at the beginning. You said watch out for the profits of the company. And that for me is an area of concern, because quite frankly my thoughts went back to a company called Satyam many years ago, and recently there are allegations that there are companies who are fudging their balance sheets, and obviously that takes up the profit and eventually their share prices. There are supposed to be watchdogs like SEBI, but as a layman or as an investor, how do we protect ourselves? Is there any kind of safeguard or insurance so that we don't get burnt in such a scenario?
So first of all, in the stock market, there is no insurance. There is no safeguard. It's a risky asset, no two ways about it. And what you're seeing essentially is the corporate governance standards, right? Because that's what protects the small investor. If the corporate governance standards are high, then that's what prevents any frauds from taking place. But with due respect, I think in India, the number of frauds after Satyam, I think, have been very few, almost negligent, and they've not been large. Satyam, I think, impacted a whole host of investors. It even affected a lot of institutional investors because it was a fraud which was done in a very systematic manner, and thereafter many changes have come in the Companies Act. So it gets more and more difficult. So I'm not so much worried about, if you take the top 500 companies, the top 1,000 companies also, I don't think that there are any major frauds or anything like that happening over there. Typically, these companies are tracked by research analysts. They have got among the top 3-4 big auditors, and you may say that Satyam also had a big 5 auditor and still it went under, but the audit standards have improved significantly in the last 4 or 5 years or so. And there are so many compliance issues like number of independent directors and the number of meetings you have, and now we have GST, and so many government agencies also are examining the books of the companies with a microscope. And then there is a whole technology has taken over in terms of what you're reporting to the government, what you're reporting to the income tax, what you're reporting to the stock exchanges. So now to commit a fraud in a big way, I think is very difficult. So I think that risk certainly has come off. But the more important question here is that the debt of the company, that is a big risk factor in India. And you can lose a lot of money if the company is heavily indebted. And someone asked about Adani. I think one of the real concerns about Adani also is that it's got too much of debt on its books. And there are concerns whether they'll be able to service the debt, whether they'll be able to refinance it. And even Vedanta recently was in the news, Sterlite Group companies, because of too much of debt on the balance sheet. So from a risk point of view, the biggest risk factor I see in a company is high level of debt, not so much about frauds.
Thank you, sir.
Good morning, sir. Sir, in which sector we should invest in long run?
Okay. Wow. So see, as I said, I think India has a growing economy. Our biggest advantage is the demographics. The youth like you is ever growing. They are highly educated. They'll be employable. Once you get employed, you will spend money on all sorts of things, buying a house, buying appliances, buying motor cars. First you'll start with a motorcycle and then move up the ladder. You are having food more outside, more than ever the previous generation. You're going for brands as well. And there's more of travel, hospitality, you're spending on healthcare. So in my opinion, I want to go for businesses where I feel the youth, the demographics, favor those businesses, and that's where the big growth is going to come from. So from that perspective, financial services, which means, banks, insurance companies, asset management companies, wealth management companies, they will do very well over the next, I would say, 5 to 10 years or so. And a large portion of our investments are in the banks and the other financial services sector, 30-40% almost over there. The next big, I would say, trend which is happening, which has not happened for the last 10 years, 15 years, I would say longer, is this capital expenditure in the country is going up. In the last budget, we had record amounts being invested in infrastructure. So building the infrastructure and then building the capacities in every sector, pharmaceuticals, automobiles, chemicals, cement, steel, everywhere capacities are coming up, green energy, electric vehicles, everywhere capacities are coming up. So the next big opportunity in the stock market is in the capital goods industry. Companies like Larsen & Toubro, ABB, Siemens, ITD Cementation. There are so many of these companies. They are sitting on huge order book position and they've got good earning visibility. So first is the banks, financial services. Next is the capital goods. And then third, we like automobiles a lot because after nearly 7-8 years, we are seeing a nice revival in the auto sales in two-wheelers as well as three-wheelers. And then the entire ecosystem means auto ancillary companies. All of them should do very well. And then as I said, I think, a new generation, I would say sectors like hospitality, healthcare, I think that's where the big potential is. So broadly, these are the 3-4 investment themes that you could look at when you're looking at starting a portfolio or managing your own portfolio.
Good morning, sir. So I have a question related to mutual fund. There has been a lot of talks going around ESG mutual funds. I came across one of the news in the last month of Feb where, SEBI has been proposing a timeline to list around 250 Indian companies to make it mandate for them to talk about corporate social responsibility, and those data will be fed into the ESG. We also looked at India also have an SDG goal, carbon zero basically. So looking forward, what would be your take on investing in ESG mutual fund? Because as of now, there are only 8 mutual funds who is offering this thematic theme of, ESG, having across 800 to 1500 crores AUM. Could this be a future if you talk about the mutual fund as in, parameter?
It could be, no doubt about it. I think ESG is getting extremely important for the country as a whole and for the economy. But, I prefer to, again, to an extent, and I may be in the minority, I think this ESG and all is again a bit of a noise over here. End of the day, you may be completely ESG compliant, but if your profits are going nowhere, then the stock price is not going to move up. It's just because that you have a carbon zero policy and you have achieved that, just because of that, the market's not going to reward you. So as I said, I think, when it comes to individual stock picking, we want to look at the profits and the profit potential of the business. And I think when it comes to investing in mutual funds, look for fund managers who have that kind of an ideology, who have been able to identify good quality stocks and who are able to find the right investment opportunities, and you've seen their NAVs go up consistently. I think that's where we should look at, because money is very serious business. It's your own hard-earned money, and that money has to give you a return. It doesn't matter whether it's ESG compliant or not. I know it's important. It's required for the planet, and there are many leaders, many companies, many technologies are coming in. But from an investment perspective, I think what matters is profitability of the company, profit potential, good stock selection from mutual fund perspective.
So now one more last question is.
Hello sir, I would like to one question. So what is your view on penny stock for beginner investor?
For penny stocks?
Yeah.
Okay. So I have been telling you consistently that, and this gentleman asked about corporate governance standards as well, that penny stocks is not for you. Okay. As I said, I'm really, what really bothers me about your generation is the temptation. And I was also when I was your age, I was also quite tempted about what was happening in the market, and we had the Vyaj Badla and all at that point of time. But that was only one sort of aspect. But you guys have got so many temptations when it comes to the stock market, like penny stocks and crypto and futures and options and everything, that it's difficult to resist that temptation, especially if your entire group of friends are buying it. But as you grow older and as you gain more experience, you will realize that these things do not work for you. And what has worked for the last 300-400 years is a good company earning profits consistently, growing its business consistently. That is what will work for you. That is what will make money for you. As I said, if you can find a stock which in 10 years goes up 50 times, then your life is made. Even a small amount of 1 lakh invested would be worth 50 lakhs. 10,000 invested would be worth 5 lakhs. So, if that should be the focus area when you're looking at investing in the stock market, not the value of the stock price. Just because it is 5 rupees, 2 rupees, 3 rupees doesn't mean that it can go up to 4 rupees or double or triple. It may. There's no doubt about that, but it will not be on a consistent basis thereafter. Right. So anyway, those of you who want, we have, I do a lot of podcasts and I post a lot of stock ideas as well on Instagram and on Twitter and all. So I have over here our QR code. If you can just distribute that to the students over here. Anybody who wants to learn more about the stock market can scan this QR code and look at following me on all the social media channels. A lot of our podcasts and our posts are around companies, around educating the investor, and we run a very popular post called Stock to Watch. So because we can't recommend stocks on the social media channel, we give the Stocks to Watch, which talks about 1 or 2 companies and why they should do well, and that those companies are exactly in this theme of which I spoke to you about, that being, look for companies which have got high growth potential, where profits are going to grow consistently. And also we do a lot of podcasts in trying to educate investors about how to look at the market and what are the recent events or so. So please have a look at it. Thank you.
Thank you, sir, for your insightful address. Being a veteran in the industry, your insights will definitely benefit all the participants present here. Now it's time for a short break. We'll be back by 12 p.m. Thank you so much, everyone. Gujarati, Bhav Bhagwan che. That means price is God. While it may sound like a slogan, the Gujarati phrase is more of a philosophy that implies that the stock market is always right and the price of the stock is the most critical factor to consider while investing. Entry and exit of stock markets depends on the technical analysis, and for that, price and volume of and its various patterns require in-depth research. Today, we are blessed to have amidst us a veteran of technical analysis, Dr. Bhushan Shanbag sir, a trader and stock market mentor by profession. Being a Master of Science from the Institute of Science, Technology and Advanced Studies of Hayati, he is known for his intellect and analytical skills. An analytical mind is what makes a person more observant and foresighted. Just the credentials needed to be a perfect person in the field of trading futures and options, which are his forte. His courses are known to be linguistically simple, with various examples making it very insightful and easy to understand. Now may I request Associate Director NMITD, Dr. Rasika Malia ma'am, to welcome Dr. Bhushan Shanbag sir. Thank you, ma'am. Sir, the stage is all yours.
Okay. Thanks for inviting, first of all. Let me declare something to begin with. Earlier, we heard to Mr. Mehta, who was much sophisticated with suit and all. I am rough. Okay, and I like to be blunt when I'm talking. I'll not speak roundabout. And actually, you know, when you people ask the questions, I enjoyed those. Interesting questions. What I enjoyed more was my answers were quite different than what Mr. Mehta gave. Okay, so I won't be surprised to find the same questions. Be assured, answers may not be the same. Anyway, so let us begin. First of all, that PhD, CMT, CFT, I don't know how many of you are aware of those. PhD, my PhD is in nuclear chemistry. I was a college professor. I was teaching in Somaiya and I was teaching chemistry since 1992. And I was interested in stock market like everybody is. And it so happened earlier in 1994, I started my trading in stock market. I'm a trader and definitely a poor investor. I don't, 365 days holding a stock, that's crime for me. Of course, I'm not saying what Mr. Mehta said is wrong, because is grass a food? Yes or no? Yes, can you eat? Now tell me one thing, is it a food or not? Or do you eat? Okay, is raw meat a food? Now somewhere you are saying yes, somewhere you are saying no. Can you eat? Again you will say no. Different animals, right? So Mr. Mehta is a different animal. Bhushan Shanbag is a different animal. Okay? All right. So let us be very clear about it. See, it's not that he is wrong. What he said is correct. But as he said, you buy a stock and hold it for 10 years, not my cup of tea. Okay, till today, I don't have a single stock which I have held for 10 years. Nothing. So let us be honest. I am a trader and trading is my business. Unfortunately, what we heard, what Mr. Mehta said was very correct. Out of 30 or 40 traders, you may find one who is successful. The reason being there is a fine boundary between gambling and trading. Understood? What majority of people do, and especially this trait I have found mainly in the youngsters, they tend to gamble. Now let us understand simple basic things. If there is a shopkeeper, what is his business? He buys goods at price X and he wants to sell it for anything greater than X. Correct? That is his business. What a trader has to do? Buy the shares at X and sell for something greater than X. Then it becomes a business. All right? Unfortunately, how do you select the shares? Problem begins with that. I saw on TV, person XYZ gave a tip. Okay, if the tip goes wrong, can you hold that person responsible? Can you question him? What is the guarantee that he was not paid for giving you that tip? Understood the problem? This SVB, 6 days ago, sharp. Its price target was raised by big foreign institutions. Okay, raised, increased. And what happened 6 days later? And why was the price increased? Why was the target increased? Was it really they did not know something is wrong with that company? Or was it so that people will run for buying the shares, so the people who wanted to create this hype can sell those shares? Think over. Okay. So today we are going to have some insights. Everything is not as smooth as was said earlier. I'll give you, now sir said correctly that the price of the share has to do with how much yield it is delivering you annually. He gave an example of 8%. Okay, theoretically perfect. In reality, if that is the case, as long as returns from the share are the same, price of share should not change at all, right? Why it changes every day? Why market falls by 10% in one day, 20% in one day, and 20% up in one day? Why? Understood? There are what we call as bubbles, positive as well as negative. And if there is a bubble, be assured it has to burst. That's right. Whether it bursts in a single boom or maybe it settles down, but then it won't keep increasing also. What happened with Adani was a bubble. Adani Enterprises price earning ratio had reached above 125. That means you invest, you buy one share and returns of that Adani Enterprises shares, it will take 125 years to return your money. Do you think it was justifiable? No. So what happened to that bubble? No, it did not. Even now it's 89. I will say grossly overpriced. Okay, Adani Enterprise, I'm talking of Adani Enterprises. Other Adani companies have smaller bubbles. All right? Understood? But will I buy Adani stock for trading? Depends. If it's going up, I'll buy. It goes higher, I'll get out. Understood the logic here? At what level should we buy? That it's not that complicated and it's not that easy either. Okay? Now let us continue with a little bit. What are my experiences? Started in January 2008. I remember the date very well. It was 18th of Jan 2008. Earlier I was doing like you are doing, majority of you are doing. Actually, you know, I had circulated a small link to a Google sheet. I wanted to know how much you know about technical analysis. Unfortunately, only about 30-35 people had filled it. But as majority of them had, they were new. Almost everybody said they are novice. So I thought I'll start from the beginning. If you are not filled it, please fill it up. Those who have filled, circulate the link to others also, because I will be sending you some links to my recorded videos, okay, and some study material if possible. So everybody should get the benefit, right? So please fill it up. I'll get it. Anyway, so it started on 18 Jan 2008 and I was not knowing anything about technical analysis. I was trading shares using the method, read in the newspaper, watched on TV, XYZ told so, etc. And to no wonder, it was not working. On 18 Jan, I was attending one program like this in World Trade Center, Mumbai. Only I was on that side. Okay? I was in a chair listening to what the experts are saying. And the experts who were there, they said, this market is going to crash. Please read the second line. In my view, we are about to crash. Luckily for us, luckily for India, it may not be a big crash, because for us, there are major positive factors and not much negative factors. But world over, if you ask me about US, if you ask me about Europe, they are bad. But now just consider one thing. Let us come to this SVB thing. SVB, government has said they are not going to bail out. Today they are going to be open for business. But be assured, this business will be only long queue of investors withdrawing money and nobody to keep money. They are just doing this that people should not totally lose confidence in banking system. In fact, I will not be surprised if they keep this bank open just for a few days, sell off their shares of whatever they can, and then let the hell loose. Simple thing. Everybody is looking after his own interests. Okay. In 2008, 18 Jan, I attended the lecture. It was a Friday. 21st Jan, market opened. It opened high like it did today. And then it straight went down, 10% down in one day. Today, when Sir said, market is luckily in the green, I just checked, it was red. So in those many minutes, Nifty went from 60 points up to 30 points red. I don't know where it is now, my phone is off. But I won't be surprised if it is deeper red tomorrow. In fact, this was sent to my students last week when SVB thing was not declared. So I said, good morning. Yesterday's failure of bullish signal was hinting at increasing bear power. Accordingly, expect some selling to emerge at the current levels. Maintain negative position. Bought puts, bear spreads. Nifty can go below 17,300 in the next few days. On Friday, market opened down. I sent another message. Students asked, sir, it is down, 1% down. Can we buy now? Or can we book profit in the puts? I said, yes, we can. But keep in mind, such a bounce back is just a corrective bounce. Majority of times, another downward move follows. This is observation. This is a study. I have analyzed only about more than 7,500 days of Nifty movement since 1990, since the day Nifty was formed. In fact, I made a small course on it. I have loaded it on Udemy. Those who are interested, I'll send you the link. You can join. Just nominal fees will be there. Not more than, definitely around 1,000. Okay, they keep on changing, but not more than that. All 7,500 days of Nifty movement data analyzed, what to expect under what circumstances. That is technical analysis. Okay, moreover, Nifty looks poised to fall below 17,300. I repeat it. You can book profit in bought puts or short positions just now. Again go short after a bounce. So on Friday there was a bounce after the initial fall when we again went short. The next leg of fall may be in the coming week. That is this week I'm talking of. SVB thing came out later after our markets closed. Understood? Can you predict? Yes. Are you accurate 100% of times? No. This is judgment. Okay, 100% success rate nahi aayega, theek hai. Even if you are correct 70%, 80% times, you still make money ultimately. As long as your rewards are bigger than your risk, as long as your probability of profit is bigger than your probability of failure, you make money at the end of the day. And what is important? What is important is by end of the month, are you withdrawing money from your trading account so that your house will run smoothly? Or are you putting money again because you have lost money? What is important? Your broker pays you or you pay the broker? Understood? So to 2008, I started after this fall. I thought I should learn this technique systematically. I started with this. 2009 again, I studied like mad. Literally, I studied like mad. Daily, I used to study 3 hours, 4 hours, only technical analysis. 2009 March, the event was again. I was this side of the dais. Okay? But you have to study a lot. Now, she said earlier, Bhav Bhagwan che. Yes, price is supreme. What is price? Price is supreme, okay. What is the meaning of price? Can anybody tell me what is price? If one person here, what is price? I heard there are some MCA and I don't know what course people and they don't know what is price. Yes. Value of that product. That is the problem. No, see, listen. Price and value are two different things. If I'm thirsty and somebody says I'm very, very thirsty. Somebody says this bottle, which is printed price maybe 10, but I'm going to give it for 30 rupees. Will I buy? Why? Because its value for me is much more than 30 rupees. But if I had sufficient water and somebody says, this bottle, I'm going to give you for 8 rupees, I may not buy. But for me, the value is not 8 rupees anymore. Value is based on need. Price is something the seller is ready to accept in exchange of this bottle. Okay? So, when I say price is the compensation accepted by the seller from the buyer in exchange of the stocks or any goods, what he's selling. Understood this? If you give me 10 rupees, I am happy to give you this bottle. So I receive 10 rupees as compensation. You get the bottle which you want. Same way, if I say I am selling Reliance, I want 2,500. You are ready to pay 2,450. Because for you, its value is only worth 2,450, not worth 2,500. For me, It's worth 2500. Understood the difference? So, current market price is the price at which your and my views match. You pay me the money, I give you the object. That is called last traded price or current market price. Simple. Bid price. Bid is the price the buyer is willing to pay. 2450, which I gave you just the example just now. So buyer says, I want it for 2450. Seller says, no, I am not going to sell it for 2450. I want 2500. So seller is asking for ask price 2500. Understood the difference between bid price and ask price? Let us say bid price is here, ask price is here. What will be the current market price? The current market price is when the last trader, last buyer and last seller agreed. Neither this is the market price nor this is the market price. At what price did the last trade took place? Okay, understood this? Agreed? So when I say last trade, all right, forget the last trade. The buyer is here, seller is here. Will the trade take place? No. When will trade take place? Both are at same level or bid and ask prices should match. So either the buyer should raise the bid or the seller should lower the ask or both. Agreed? Understood? As long as the two are not matching, as long as bid and ask are different, we say there is a spread or we call it a bid ask. Bid ask means difference between bid and ask. Okay? So, difference between bid price and ask price is called a spread. Understood these terms? No problem. So, as what I heard, 172 new accounts were opened. Remember, when you open the software, you will find bid prices, top 5 bid prices are given. You will find ask prices are listed, top 5 ask prices. How much order is for bid and how many buyers are there, how much price for ask and how many are there. Everything will be given. If you say I want to buy the share at the market, that means the lowest ask price you will have to pay. Okay? But suppose you want 1000 shares and ask, there is only 250 shares there and you say at the market buy it. What will happen? Till 1000 order is fulfilled, your bid will automatically go on increasing to higher and higher ask and you will get your 1000 shares. If you say no, I want at this price, other way around I don't want, then don't give the market order, name your bid, specify your bid. Okay? So these are the basic things. People don't know about these and they are not taught about these. Let us move on. For a deal to take place, bid must match with ask or the spread should become 0. Clear? Now some of you may be knowing this, some of you who said they are novice may not be knowing this. Of course, it's going to happen in whatever I am going to speak. Some things you may be knowing. But I am considering all of you to be novice and teaching accordingly. If you have any doubts, you are free to raise your hand. I'll answer immediately. Okay? Be assured. Many times people tell me, sir, I have a silly question. There is nothing like a silly question. There may be silly answer to a question. All right? You are free to ask. Let us proceed. Why does price of a share increase? Now looks a silly question, right? Actually, this has an intelligent answer. Many times we are having a wrong assumption that it's demand which increases the price or supply which decreases the price. No, it doesn't. Let us say at the bid price there is demand. At ask price, very little supply is there. Demand is huge. Now what will happen? Let us say somebody is buying 1 lakh shares. He has put his bid at 100 rupees. And at 100 rupees 10 paisa, there is only 10 shares to be sold. Ask is only for 10 shares. 100 rupees 15 paisa, there are 100 more shares. 100 rupees 20 paisa, there are 500 more shares. What will happen to price? Nothing. There will be no deal. For the deal, bid must match the ask. So, isn't demand there? Yes. Has the price increased? All right, somebody puts an order. All right, 100 rupees 10 paisa, 10 shares. He buys it. Now what has happened? Bid has been raised to meet the ask. Again, after that, there is no other deal. Everything has a standstill. Somebody else, okay, fine, he puts another order, 100.15. There is a deal, market price has increased. Next seller is at 100.20. The price will increase only if bid is chasing the ask. Other way around, price cannot increase. Only there is demand, price cannot increase. If demand keeps on coming at higher and higher and higher price, then the price will increase. Is it clear? No questions? When will price decrease? Very good. When ask price goes on decreasing, whoever is buying, give the stock. Whatever price you are getting, give the stock. Ask is lower and lower and lower. If ask is chasing the price, ask is chasing the bid, then only price can decrease. Okay? Other way around, if bid is not ready to go up, if ask is not going to come down, last traded price will remain last traded price. There will be no change in it. Now, I hope this is understood. Why does a price increase? Why does the price fall? And when I say share, it doesn't necessarily mean only shares. It applies to commodities, it applies to currency, it applies to whatever you say. Okay? Whatever you say. So for price to increase, bid has to go up. For price to decrease, ask has to come down. I hope that is clear. Is the price related to news? Many times people ask me this, okay? That sir, such and such a news is there in Reliance. Should I buy? Now let us understand. This is worth understanding. Let us say you see a news on TV flashed, Reliance has got natural gas reserve, huge natural gas reserve somewhere. What should you be doing? What do you think? Should you buy? Should you sell? Should you neglect? See the problem here. Reliance has huge gas find over there. Who knows it first? Who is Reliance? There is no person called Reliance. Board of directors, do you think board of directors went to dig over there to check how much gas is there? See, you are answering, that's a very good thing. Others are keeping silent. No problem in going wrong. You are here to learn. Okay, so I welcome your answers. The person who is doing that digging, who took the samples, who analyzed it, who found out that there is such a huge reserve over there, He knows it first. What will he do? First, he will buy shares. He is not going to report it to his senior. First, he will buy shares. He'll tell his relatives, friends, first cousin, second cousin, 10th cousin, buy Reliance. Then he will report his senior. His senior will verify it. Then what will he do? When these all people go for buying, they know that Reliance में कुछ तो है, भाव बढ़ने वाला है. Will they chase the price or not? What will happen to price of Reliance? Stepwise, it reaches the board of directors. Board of directors, they are not supposed to directly buy the shares, right? What will they do? They'll not buy the shares in their accounts, right? They'll come out with the bad news for Reliance first. Why? Then what will happen? Some other people may buy it, right? And then when the news of Reliance getting such a big gas find comes on television, what will common people do? Run to buy. Who is selling? ये उनके घर में टीवी नहीं है क्या जो बेच रहा है उसके? Why are they selling? Because they may have bought it much lower. When should you be buying? भाव भगवान छे, भाव बढ़ने लगा ना तो खरीदो ना, तुम्हें क्या करना है न्यूज से? And what should you be doing when the news hits the market? Get out. Get out. Price will go up one day, 2 day, third day, and then there is a crash in that stock price. It is not going to go any further. Understood? Make sense or not? Okay? Understood this? So, is the price related to news? It's always said, buy the rumor, sell the news. Any news which hits the market gets discounted in, usually, majority of the news of this type, 30 to 35, 40 minutes, half an hour, 1 hour, that's the end of it. Beyond that, the effect doesn't last. If it's very important news which is making fundamental changes, like economy of the country going bad, that has long-lasting effects. Remember, SVB crash is the second largest fall of a bank in American history. Okay? In 2008, Lehman Brothers crash brought Nifty from 6,300, mind the levels, 6,300 to 2,200 in 10 months. 9 months, in fact. January end to October end. 6,300 to 2,200, 1/3 the levels practically. Okay? COVID, Nifty came down from 12,400 to 7,500, 40% fall in 1 month. March 2020. 1 month flat. Always remember this. Because whole fundamentals were changing, lockdowns होने वाला है, industries are going to suffer, everything all got discounted in that 1 month. All right? Of course, in my life, I have never seen a bear market last that small length of time. The fall got over very fast. And you know, I started buying shares on the day, same day, when Nifty reached 7,500. Why? Because I knew it's not going to fall further. Who told me? Thank you. Now let us meet a few animals. I'm sure you know the names of some of them and don't know probably why they are called so. Who's this? Why are they called bull and bear? Any ideas? I read a number of stories about this, but I found only 2 of them which are reliable. So I'll just tell you here. Now, actually, there is a street in New York in good old days in the 19th century. There was a wall on one side of the street, and on the other side, there were small cafes and inns. So there was no proper building for stock market. So share traders, they used to gather in those cafes, snack bars, and they used to trade shares. So the name for that street became the Wall Street. Now there is no wall, but the name has remained Wall Street. On the other side of the wall, there was an open ground. And on the days when there was no share market, what these people did once was, there was a vertical pole buried in that ground. So they tied a bear to it with a chain and let a bull attack it. Because of the chain, the bear could not run away. But what was happening? Bull was trying to put the horns below the bear and throw the bear up. And bear was standing on the hind legs and hammer down the bull. So those who want the prices to go up, what we call them? Bulls. Those who want the prices to come down. The basic difference is, let us understand the difference. What the bulls actually do in the market. So this was one story. The other story was slightly different. I'll first narrate the second story, then we'll come to their working. Other story I found more reliable, that for making goods, skins of animals are used. So bull skin, called bull hide, HYD, bull hide and bear skin, both are used. So bull hides, what those traders used to do, they will go to the butcher and they'll buy the skin from there and come to the shoemakers to sell it. So first they will buy at price X and sell it at price greater than X. What the bear skin traders were doing, fur was in demand, but fur was not available in the USA. It was much northern in Canada and Alaska and all. So they will first get the orders here. They'll take money. Then they will go to the tundra, Alaska, whatever. They'll buy the bear skins, come back and deliver it. So first they will sell at price greater than X. And then they will go and buy at price X. So in share market, those who buy first and sell at a higher price or aim to sell at a higher price, they are called bulls. Those who first sell at a higher price and then aim to buy at lower price, they are called as. Understood? Any questions? I believe this second story much more logical. Now see what happens further. What the bulls are doing? They are buying at lower price, selling at what the bears are doing? Are they doing different things? Okay, bulls will first take the shares in their hand and then sell it. Bears will sell when they don't have it in hand and then buy it once the price falls. Now you will say, how can they sell? See, they are making agreement, right? What the bear skin traders were doing, first they were making an agreement to sell the skin and then going and buying it, na? Actually, na. मिल बांट के खाते हैं. Both are actually doing the same thing. Understood this? But there is a third category about which nobody speaks. Now there are two different words used for it. In Western countries, they are called the pigs. In Indian subcontinent, they are called the bakra. Who is this? कॉमन पीपल ये दोनों भी मिलके ना इनको काटते. Bulls or bears, you be a bull, you be a bear, don't be a bakra. Understood this? Any doubt to anyone? Okay. So remember it. Now, let us continue further. What is the difference between bull, bear और बकरा? बकरा है ना, he will buy higher and he'll sell lower. Okay? A technical analyst sees to it that he doesn't fall in that category. All right? When the price starts increasing, a good technical analyst will buy. What is he hoping? Price will increase, then he will sell. But as sir had said, there is a lot of noise. What is noise? Noise means price doesn't go up every day. It will be up, down, up, down, up, down, up, down. So there are different tools in technical analysis which help you to understand how to cancel out or lower this noise, so that there is less confusion. And when there is no confusion or less confusion, it makes it easier for you to take the decision that, okay, I had bought it, but it has started coming down. Should I immediately sell it? If your technical indicators say yes, get out, that was a wrong signal, no problem, get out. At a small loss, you will get out. When you say at profit, if it is running up, down, okay, but overall from point A to point B, it's going up. Hang on. The problem is, what sir said, we don't know when to get out. That problem happens with fundamental analysis. Technical analysis, you know when to get out. You know how much loss is substantial loss, now get out. That level is called a stop loss level. Stop loss helps you get out in case the position is going against you. Okay? So, fundamental analysis doesn't have a stop loss. They say fundamentals of the company are good. So, hold on. Unfortunately, the cases like Satyam, the cases like SVB, by the time you come to know that fundamentals were themselves fraudulent, it's very late. And it's not that frauds don't happen now. Now only the form has changed. And even size has become. What about Nirav Modi? Wasn't that a fraud? What has SEBI done? Can SEBI do anything? SEBI can't do one iota about it unless and until the fraud is already out. But by then, the magnitude is huge. That's the problem. Okay. By then, the magnitude is. What happened to Malia? Not Madam, Vijay Malia I'm talking of. Fraud, no? Nevertheless, it was a fraud. Okay. No problem even if you say to Madam that I said like this. I know her even when she was very young. Anyway, so let us continue further. So what makes the difference between bulls and bears or pigs and goats? Let us understand technical now. I have explained, I think, bulls, bears, pigs. So now, do you know who is this? Yeah, it's not, no. It's not me, not my cartoon of childhood photo. Let us say this is Bandu, a naughty boy, just like many of us, who likes to play, doesn't like to study. Okay? Now, last semester, there was a school unit test. And he got only 4 marks out of 20. बाप ने बहुत धोया. That is different. But Bandu decided this won't do. I have to work properly. I should not be getting these marks again. इतनी पिटाई वापस नहीं चाहिए. Okay. So Bandu made a study plan and started systematically studying. Next unit test, he got 7 marks out of 20. Borderline, either giru ki udhar giru, but he passed. He said, nahin, I'll continue the same way. Okay? So from 6 he got 4, he got 7. Then next unit test, he got 10 marks out of 20. Yes, performance is improving. If I really study like this, I am getting better marks. First he had got 4, then 7, then 10. He continued studied like that. Next unit test, how many marks will he get? Guarantee hai? So he made a study plan, started studying. What was the result? His marks were improving. If he continues like this, how many marks will he get? Somebody said 13, somebody said 15, somebody said 20, okay. But as I said, is there any guarantee? But isn't there higher probability? So guarantee nahi hai. There are no guarantees even in the stock market. But there is an increased probability that if the price of stock is increasing, it is likely to continue going up. You buy the stock. Hold on till it is going up. When the technical indicators tell you, अभी बहुत हो गया, 20 में से 20 तो नहीं मिलने वाला, उतना कैपेसिटी नहीं है उसका, निकल जाओ. Make sense? Understood this? That is technical analysis. So how many of you think you understood technical analysis, basics of it? Now only 2, 3, 4, 5 people are raising hands. So okay, fine. Let me put it other way. How many of you have not understood what is technical analysis? Raise your hands, please. There is a larger proportion who is neither raising hands on this question or that question. So what am I understood to understand from this? Middle, इसमें middle है ही नहीं ना, या तो समझा है या नहीं समझा है. Middle क्या सोए थे, सुना ही नहीं है. Anyway, if everybody understands, my job will be at risk. Okay? So let us come to the basics. Principles of technical analysis. Remember, technical analysis has 3 basic principles, 3 basic rules. Okay? What are these? First, price reflects every known information, and price will change if there is any change in information. So, till last week, whatever was known about SVB was being reflected in the price of SVB. New information came out which was unknown earlier. So now price has dropped, because now it became known that SVB, okay, they have a very big vault, but there is nothing left inside. Earlier the vault was closed, now it's open. Okay, price reflects everything, and with that everything gets reflected in price very, very quickly. As I said earlier, half an hour, 1 hour, that's it. Okay, so Adani, the moment fraud came out, not fraud, it was not technically a fraud, the information came out, the stock straight nosedived, opened down, went down, again lower circuit. That was the end of it. It bounced from there and now it's finding its ground. Alright, some people are chasing the price, ask price, some are chasing the bid price, so price will keep fluctuating but ultimately stabilized. Alright. Second, prices of stocks move in trends. What is trend? Trend is a direction. If the stock starts going up, it is likely to continue go up at least for some substantial length of time. If it's going sideways, we say the trend is flat, it will continue going sideways, and if it's on downtrend, it will continue falling for a while. Okay? And third and the most important principle, history repeats. Lehman crashed, global markets crashed. Now, okay, understood? History is repeat. But always remember, though we say history repeats, it doesn't repeat every time exactly perfectly. Its magnitude keeps on decreasing. So, it may not go that bad, but still it will be bad. Okay? Clear? It may not be as bad as 2008 bear market, but there can very well be a bear market, especially as sir correctly said, if next 15-20 days something else comes out, then it's finished. Definitely not a time when I would buy shares. Okay? I will wait. Let it fall. Many times the people ask me, sir, this share has fallen so much, should I buy? It's like, the share is falling. It's like a falling knife. You want that knife in your hand. Should you catch it when it is falling? No, it will cut your fingers. Let it fall. It may bounce again. Let it stabilize. Then you pick it up. Okay? Understood all this? Always keep in mind, technical analysis is a soft science. It's not like your physics or chemistry or anything where some strict rules are to be followed. There's more of understanding in it because, price, as I said earlier, how much is value of something? That keeps on changing with situation to situation. You are thirsty or you are not thirsty. All right? So, similar thing happens here, that it's a soft science. You can't always apply rigid rules. It's more like psychology. Psychology, is it a science? Definitely it is. But can you use same rules, same principles to every individual every time? No. It's a soft science. Same way, even technical is a soft science. So, it's a function of mass psychology. Ultimately, who decides market price of the share? The masses do. If majority of people find X price justified, they will be buying at X. But if majority don't feel that way, that price may not hold, right? Mass psychology. And real skill of a trader is to understand how much leeway to give to this mass psychology. Okay, that comes with practice. And that comes with thorough understanding, not just one or two principles. Like Anita madam correctly said, you can't learn driving by reading a book about driving or even by watching YouTube videos. Correct? If somebody says tomorrow, I know driving very well, I have got this new car, I have learnt everything about driving, I watched 3 hours of YouTube videos, will you sit beside him? Same is true with trading. You want to learn trading? Learn from a trader. Don't learn from who is just an expert on paper. Because a trader can tell you much more or he can teach you much more than just who knows the theory perfectly well. Okay? Understood? It's already 1 o'clock. Am I allowed to continue? Thank you. Also keep in mind, it's not 100% times correct, but a good trader can have 80, 85, 90% perfection. And that is substantial. You need not be accurate every time. Okay? As long as your losses are small, profits are big. 90% success rate is fantastic. If your losses are big, profits are small, then even 100% success rate nobody can get it, but even 90% success rate cannot give you anything then. Okay, and if anybody claims he is correct 100% of times in trading, be assured only two possibilities: either he has never traded or he is lying. It's a business, and in every business, some trades are going to go wrong. Your skill is keeping the losses small, profits more, and probability of success greater than probability of loss. Clear? You have to focus on these two things. Without checking these two, I never take a trade. I'll first check how much money I may lose in this trade. Is it acceptable for me? If it is not acceptable, can I insure my position? The answer is yes. The answer is yes. In fact, those who buy shares with the hope it will go up and they keep on holding the shares even though share is coming down, okay, or sometimes they'll just hold the shares, it's coming down, they will buy more. Why? Averaging it. We call it hopium. You know what is hopium? A drug which is more dangerous than opium. Just hoping it will go up, it will go up, it will go up. I still remember 2008 DLF. One of my friends had bought, 2007, he took a loan from bank worth 2 lakh rupees and bought all real estate shares. I said, what you are doing? When I came to know, I said, what you are doing? Why you are buying this? He said, no. See, I have got this loan. That time interest rates were high. He said, I have got this loan at 15%, but the stocks are going up at much, much higher speed. I said, see, if stocks are going at much, much higher speed, that simply tells me bubble is blowing very fast. I think we talked about this around 2007 October or something. In 2007 December, he told me, Bhushan, you had told me that this market is going to burst. My shares are already 20% up. And I am going to pay 15% at the end of the year. Annualized returns 15%. And 20% I am already in profit in 2 months. I said, okay, then book your profit and get out. What nonsense you are talking. Again, around 15th of Jan, he told me, see, I am up 30%. I said, get out. No, what nonsense you are talking. On 25th of Jan, we again met. Market had hit 21st Jan, 10% down. 22nd Jan, 10% down. He said, okay, I am just barely below my buying price. Where real estate stocks went down like anything. He was paying 30,000 rupees or 2 lakh. On 2 lakh, he was paying 30,000 per year in interest. Still, he is paying 30,000 per year in interest. Real estate stocks, what he had bought. DLF, I don't know what is the current price. Last time I checked, it was around 250, 300. He had bought it around 500. HDIL, he had bought around 1600. I don't know, it was below 100 last time I checked. Some stocks, they have stopped trading, nobody buys them. So finally, he had to pay 2 lakh from his pocket to close down that loan. That's not the way to trade. Many times people, they buy at the wrong levels when the markets are very high, and when the market crashes, they say, I am a long-term investor. No, you are not long-term investor, you are an idiot. Okay? Long-term investors buy when the stocks are low, not when they are at the top. And whenever you find taxi wala is talking of share market, pan wala is talking of share market, lift wala is talking on share market, technical analysis tells me that's time to get out. Okay? That's the difference. Now, exactly what do we use in technical analysis? We use something to know if the price is increasing or decreasing. And that is called charts. Chart is nothing else, it's a graph. You know what is a graph, right? Usually it's a simple graph not pie charts or anything. Okay. Usually we use just XY axis charts and price against time. In majority of the charts, it's price against time. There are different type of charts, but these are most popular. Price, time. Price on the x-axis, price on the y-axis and time on the x-axis. Okay. What time? Time can be in minutes if you are a day trader. If you buy and sell within a day. It is in hours. It may be days, weeks, month. Or you may even think of longer term investment using quarterly charts, yearly charts. Possible. Okay. Again, as I said, depending on what kind of trader you are, you have to choose your chart. Wrong chart won't help you. Let us understand simple thing. You know a drill machine? Who uses a drill machine in his work? Carpenter. Anyone else? Electrician. Anyone else? Does a dentist use a drill machine? Yes? Next time you are having a toothache, you go to your dentist and he comes with carpenter's drill. You wanted minute chart, you use monthly chart. That is exactly what will happen. Degree of fineness has to be perfect. Okay. There are bar charts, candlestick charts, line charts, etc. Other types. Now we don't have, unfortunately, we don't have time today. I can speak on this for days, but we don't have that much time. So I'll just stick on to what is the most popularly used. What is used? Candlesticks. All right, we'll talk on candlesticks. Okay. So these are called as Japanese candlesticks. Japanese because the technique was used in Japan more than 300 years. Western world was using the bar charts. In 1990s, early 1990s, a person, American, named Steve Nissen, he had gone to Japan when he saw that Japanese technicians, they were using some different type of charts. So he asked, what are these? He learnt about Japanese candlesticks and he wrote 2 books on it. One is Japanese Candlesticks Explained and another is Beyond Candlesticks. Steve is actually my Facebook friend even. But he wrote those 2 books and the Western world found those candlestick charts very interesting. Are they giving more information than bar charts? Technically, no. But it's easy to interpret. That is why candlestick charts became more popular. A long-term investor uses a line chart. He doesn't need candlesticks. But let us talk, as a trader, I am more interested. Suppose if I say I am using candlesticks. So what exactly is a candlestick? Let us understand that. Trader says 4 prices are important. Which 4? Opening price, highest price, lowest price, and what is opening price? Price at which the first deal took place, not market opened. Market might open and there may not be a deal. So price at which the first trade, first deal took place on that day or on that hour or for that minute if somebody is using a 1 minute chart. So market might have opened, but even now I can have an opening price. Okay. What is highest price? High. The highest price at which deal took place on that in that time span. What is lowest price? The minimum price at which what is closing price? Here is the problem. For almost all the charts, it's the last price or last deal took place, whatever. But for daily chart, where you plot 1 candle for every day, it is not the last price. It is the average of last 30 minutes. That is the rule. So whatever deals took place in last 30 minutes, price and volume. Based on that, the last price is decided. Many times, those who observe the markets, you must have seen, I saw the price this and market closed and suddenly it is showing something different. That is because that is averaged out. But let us understand about candlesticks. Two types of candlesticks, bullish and bearish. What is bullish candlestick? A bullish candlestick looks like this. Color is green, white or blue. American charts have blue. All right. What does this tell us? This tells us the opening price, the closing price, the lowest price, the highest price. So that vertical green band that you see, that is called the body of the candle. From body till the highest point, it is called the wick or upper shadow of the candle. Body to the lowest price, lower shadow, and body is the difference between open and close. Okay. So when you see a candle like this, this tells me it opened here, went down, went up to that point and closed over here. But remember, how you interpret, very, very important. Bearish candlestick on the other hand, what happened to this? Okay. So bearish candlestick looks like this, where open is high, higher price of the body. So this is opening and this is closing. Other things are same, lower, high, lower shadow, upper shadow and the body. What are the colors? Red or black. If background is white, usually we use white and black. If background is dark, usually we use green and red or blue and red. Okay. Look attractive, they are colorful. Bars are not that attractive. So candlesticks became more popular. Have you understood this? But what is only one candlestick if I show you, you are not able to tell anything about the stock. What is important? What do I study when I see the candlestick? Is number one, color of the candle. Bullish or bearish. Bullish means the price came up from the opening price. Bearish means the price went down from the opening price. How long is the candle? Compared to the average size of candles, do I call it a short candle or do I call it a very long candle or is it just a normal candle? Unfortunately, many people, they just look at the color. Okay? Color is not that important. Other things are more important. How long are the shadows? Upper, lower. Why upper? If upper shadow is long, what does that mean? The stock went up but came down. If the lower shadow is long, what does that mean? Stock went down but came up. That is also important. How much higher could it go? How much lower could it go? And again, the other party out of bulls and bears could force the other direction. Majority of traders fail to understand this. The problem starts here. Okay? And compared to yesterday's candle or last few candles sometimes, what is this candle doing? Is it going further down? Is it coming up? What is happening? All that is important. So those who are using candlestick charts, those who are trading or trying to trade or will be trading soon, Sher Khan Trade Tiger is one of the fantastic free software which is given to all Sher Khan customers. Okay? So it's a very good one. I use it. Personally, I like it. For intraday charts, it's fantastic and it's free. I have Sher Khan account since 1994. All right? So where is this candle? That is important. Now let us take one quick example before I finish. So let us see. I'm showing you a candle. You have to tell me, what do you think? Bullish, bearish, what? Okay? Now see, half of you are saying bearish, half of you are saying bullish. What this candle tells me? This is how the price has moved, right? It went down all the way and came up all the way. So the first leg was bear power, which was pushing the price down. What happened afterwards? Bull power pulled the stock up when bears failed to hold their ground. Bears could not keep the price down. Is it bullish candle or bearish candle? Again, you are doing the same mistake. Do you know where is the previous candle? Previous candle is important. If earlier the stock was falling, now understand this. Understanding concept is important. It's a soft science. If previously it was falling and then I get this, which tells me now the stock, bears have stopped. Bears could not push it down. More likely, probabilities that stock may come up tomorrow. If the stock was originally going up and then this candle has formed, I'll say, okay, bull power is probably over, but because bears were powerful at least for the first half of the day. Correct? Fine. Stock was going up, bulls could again pull it up. Not big thing, right? But bears could push it down is more important. So more probably, I'll think of, if I have the stock, I'll think of booking profit here. It may not go up. At least some profit, I'll take it off the table. At least partially, I'll book the profit if such a candle is formed after a good rally. And if the stock was going sideways and something like this is formed, I'll neglect it. I'll say, okay, वैसे भी किधर जा रहा था, अभी भी किधर भी नहीं गया. So candle is the same. My interpretation is different. Unfortunately, you look at any of YouTube videos, textbooks or whatever, red candle means bearish. Without understanding, you can't interpret a candle. Understood this? If you are interested, be in touch. I'll send you some study material also. Okay? Madam, please circulate the link which I had given. Only about 30 people had filled it. No. Okay, but then you can circulate it again. Huh? Yeah. So just do that. So this candle, you can't judge just by one candle. You have to see in context of many other things and understand the concept of it. So technical analysis is a soft science. You have to understand and then apply it. Okay? Everything I cannot teach. Hope you are understood. Any questions are welcome. I have courses on Udemy and I will be soon actually loading much more. I was teaching actively so far, but now more courses I'll be putting on Udemy. So the prices remain relatively low. So majority of you can take advantage of it. I think only 2 courses are loaded already. Others I'll be loading soon in coming few days. I'll send you the link, madam. Because if I give the link here, it has no meaning. Nobody is going to keep on typing the whole link. I'll send you the link. You can circulate that, please. I'll circulate. I'll send it to you. Any questions? Thank you for being here, all of you. Any questions? No questions? Yes.
सर maybe हा question silly वाटू शकतो तुम्हाला, but how much time we need to spend on researching about the stock?
Okay. First of all, good question. To understand technical analysis, how much time do you take? That is one part. And once you have understood it, how much time does it take? It's second part. I'll take it this way. As I told you, I started learning systematically in 2008. Almost 1 year I spent on it, every day studying, 3 to 4 hours, okay? Not as an average, every day. Nifty has that time it had about 1500 listed shares. So once it was a holiday on a Friday, I decided that let me go through all all stocks charts just for understanding. And those 1500 stocks took full 3 days, Friday, Saturday and Sunday. Okay, just to go through the charts, whatever parameters I was using, just to find out it's bullish, bearish, sideways, what it is. Not that even now I am not expert in it. There are many facets which I don't know about it. And new things always keep coming up. But in 2012, I came to know about this CMT program, Chartered Market Technician, which is a US program. It has 3 levels and passing marks are 70%. Passing is 70. So, fine, I appeared. I am not a commerce person basically, but this was about technical analysis. And when I was studying technical analysis, I realized that this does not require commerce. Even now, if you ask me, you give a balance sheet in front of me, I won't be able to read it because I don't need it. All right? I use the price charts. I use the oscillators, indicators, other things. Now, if I say I want to study 1500 charts, all 1500 charts in Nifty, maybe a little more, few more companies have got listed. It may take maybe 3 hours, 4 hours. Just a few seconds. And in a glance, you can say, okay, fine, this is happening. This is my inference. Now, later on, I started with futures options. I got fascinated with it. But future option, there are only about 150 companies. Okay, and out of that, those which have good liquidity. Liquidity means daily volumes, where entry and exit is not a problem. For a good investor, it's important that you should find a way out. Okay, you bought a stock and when you want to sell it, if there is no buyer, what's the use? So for good liquidity, there are only about 30-35 companies. So I focus only on them. And believe me, my 90-95% of my trades are in Nifty and Bank Nifty options. I don't even touch the stock options. Because the rules of settlement is that are different for index and different for stocks. So how much time does it take to read a chart? If you are practiced enough, it just takes a few seconds to decide whether this chart is worth paying attention or it's not. Then if it is worth paying attention, you may spend 30-40 seconds, 1 minute to find out, should I buy it, should I short it, what should be my stop loss and what is my likely target. Okay. So once you have, but practice has no shortcut. Any other question?
Sir, here.
One at a time, yeah.
Sir, if everyone wants to eat, then who will cook? Likewise, in market, everyone wants to...
No. Just a minute. There is no question of everyone wants to eat, who will cook. Everybody can cook and then eat.
Okay.
The question is, everybody wants to eat, who will serve?
Okay.
Or who will provide the food? I think that would be more correct question.
Yes, sir. Yes, sir.
Simple answer is there. How many people trade and how many of them actually practice technical analysis? I hope you got your answer. It's always there that there are 1,000 idiots for 10 people who know what they are doing. There are more like, shiny object syndrome. Something is shining, so I should go for it. There are more people like that. And majority of the times I have seen, when market is running up, stock is going high. On Satyam fall, Satyam gave a sale signal around 400, when it was I think 390 or 400. Okay, it came down. On 7th January 2009, it was trading something like 190. Now a technical analyst sold it over there. At 190 also sell signal was continued. For a fundamental analyst, it was a first class buy at 192. Satyam fraud came out, Satyam reached 6 rupees. Who was buying? And who was selling when Satyam was at 192? Understood? Buyers are always there, sellers are always there. That is why you go for liquidity. Don't go for illiquid stocks. Don't go for any contracts that are illiquid. But if liquidity is there, see, world is full of idiots. Okay? There is a classic, I don't know how many of you know Marathi, there is a classic writing by famous writer पु ल देशपांडे. जगात कुंभार थोडं गाढवं फार. कुंभार वा गाढवांना तोटा नाही. There are very few people who make pottery and very large number of donkeys. So become the potter, don't be the donkey. Alright? So people are always there to sell. How many people, when you see the news on television, how many people rush to buy and how many, all of them get the stocks. So why people are selling? They don't have television in their home, or they know something which the buyers don't know. Alright? And remember, when there is no buyer left in the market, everybody is selling, start buying. That's the best time to buy, when hardcore long-term investors start dumping their portfolio. That is the last day in the bear market. That's the golden rule in technical analysis. If everybody is greedy, you become fearful. Everybody is fearful, you become greedy. Any other question?
Sir, I have seen that many traders use indicators on the charts. They are useful or not?
Honest? You want me to be honest?
Yes, sir.
I don't use majority of indicators except those which are related to momentum. Momentum is rate of change of price with respect to time. At what speed is the price changing? Okay? See, simple thing. If you throw a ball up, how does it move? It will go up. It will keep losing its speed. It will not come down. First it will lose its speed.
Yes.
Slower, 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 stops. Then it turns down, starts gaining speed. Stock which is going up doesn't come down unless and until, of course, there is some unexpected news. That part accident always there. But other way around, it will keep on going up, up, up. As it starts going up, I buy. It goes up, I hold. It goes further up, I may book partial profit, hold the remaining. As it starts slowing down, I get out. Then isn't it possible it may pause there and again start? Okay, I'll buy again at that time, if it again starts going up. But for that time, when it is momentum is losing which momentum, I get out.
Okay. So have you holded any position right now?
Right now I am holding Nifty puts, Bank Nifty puts. Some of them are hedged, some of them are not hedged. Strategical playing. Yes. I don't know where is Nifty right now. I'm basically options trader. Basically, I love options. They give much better returns than buying in cash or buying in futures. And options is the insurance. Options can insure my position. I don't like risk, not too much. It has to be controlled. Yes.
So my question to you is, if someone want to begin with option trading, as you mentioned that you have
learn it first.
Yeah, Bank Nifty put.
Learn it first.
Yeah.
It's too risky if you do it without learning.
So is technical analysis enough, or
technical is not only technical is not enough.
Okay.
How to use options, that is also required. Okay. So only technical will tell you which stock is likely to go up, but which option should you be buying, or how should you be lowering the risk, or should be selling. For that, option trading is advanced part. First you should know the basics, technical, then go for option trading. Then you can do it. But don't do it without knowing both sides of it. Any other doubt? That's it. Can I say stop? So thank you very much, and Hope you will be in touch in future also. Okay? So looking forward. Please fill up that Google form. I'll get email IDs. So anytime I am having a public lecture or anything, or in case I launch any new course or something where I will be live teaching, or in case I load something on Udemy portal, I'll keep you informed if you are in touch. Okay? So thank you very much.
Thank you so much, sir, for taking a master class in technical analysis. I'm sure the participants must have made a note of all the key learnings. Now it's time for networking over the power lunch. The lunch is arranged near the JSKB hall on the ground floor. I request all of you to be here by 2:15 p.m.